and then we'll start meeting. Okay, and we're live. Good morning, everyone, and welcome to another episode of the Crypto Hour. Today, this week it would been a kind of a very news-heavy week. So, we'll start with the general economy, and what the news that you might have followed about raising interest rates and raising interest rates and possible economic policy for the future. Let's have a look at what we can expect and what effect they have on the general markets, on the crypto markets, etc. So let me start sharing my screen straight away. If you remember last week, we were talking about the dollar index and how it was teetering on the brink of a demand zone, which, if broken, could then bring the dollar to a lower level by a couple of percentage points. So let's see what happened this week. Okay, so we've, as you can see, we've had the GDP from Canada on Tuesday, and the consumer confidence from the US, unemployment change in New Zealand, and then on Wednesday and yesterday, we are kind of the heaviest of the announcements. So we had the interest rate announcement in the US, which was as expected, increase of 25 basis points, and some manufacturing data. So there are two separate kind of type of statistics. From one side, we see that the inflation is starting to get under control, and on the other side, though, so where many people can expect that the economy may have kind of like a soft landing, although we're heading for a recession, many analysts are expecting a kind of a shallow recession, and what is called like a soft landing in a way for the economy, so that we wouldn't need to suffer so much in the coming months and years. But some data are actually saying something different. So, for example, we see lower numbers for than expected for the non-farm employment change. This is a precursor to what will be announced today at 1:30 p.m. UK. So if you are in any market, in particular in the foreign exchange markets, please make sure that you are well protected if you're still in the market around that time. So either get out altogether, or if you are in some sort of trade, make sure that that your stop losses are quite tight, and then you don't run the risk of just incurring a loss simply because of volatility, because at 1:30 p.m. there's going to be like a lot of volatility. Whenever there is this announcement, is very volatile. But going back to data, funny enough, you see all these numbers that are being released, the employment change, the manufacturing data. As you can see, there's quite a bit lower than expected. So this is what when the market reacts, when there are kind of like, so this middle column is the expected, so before the announcement, what the market expects. This was the previous months, and these are the actual figures. So whenever we have a surprise, markets don't like surprises, so generally they react quite strongly to that. But the thing that everybody was looking for this week is not numbers. It's actually the press conference, both for the Federal Monetary Committee, so Jerome Powell, and also from the Bank of England. Okay, so both the US and UK increased rates as expected. Okay, 0.25% for the US and 0.5% for the UK, which still has some way to catch up. But what came out of the press conference is kind of like a different picture. Okay, now especially if you look at statistics coming from the US, there was a poll that was published last week that shows that about 57% of Americans would not be able to pay if they had an extra expense coming up of $1,000. Okay, so if you had I don't know, your mortgage going up or something broke in your home and you have to spend $1,000, 57% of Americans wouldn't be able to pay those extra $1,000. So obviously, these kind of figures play very heavily on the mind of policy setters. Okay, and although it's the Jerome Powell was in the press conference was trying to talk tough, saying, well, the inflation is not under control, we want to get inflation to 2%, etc., etc. What really he was people heard. So one thing is what he was saying. One thing is people heard actually this is starting to soften their stance towards increasing interest rates and inflation. And so the market actually reacted positively to the announcement rather than negatively. Okay, but in any way, when we look at if we look at the charts, so this is the dollar index. Okay, let me just try and make this a little bit bigger so you can see better. So as you can see here, we've been sitting in this area of demand. So when the market came down, I'll show you. So you can see what the kind of sharp drop that we had since October in the value of the dollar. And then when there was this kind of area of previous demand that goes back to May of last year, you can see that the decrease rate actually slowed down, and actually we sat in this area for a couple of weeks. After the announcement last week, you can see the market penetrated this area. So this is not in play anymore. We can take it off the chart. So what's the new real? Okay, so what's happening now? The new figure, although as you can see yesterday, the value of the dollar went up, and it's still going up slightly today. This is the new paradigm. Okay, so at the best case scenario, we'll then settle around this figure here, which is, so let's just measure it. Okay, so let's say consider here from where we are roughly right now, which is kind of midway of where we've been for a couple of weeks, and and we measure to the middle of the kind of demand range. We're talking about 1.5%. But what's looking more likely is that eventually, obviously, it will take a little while, but over the next couple of months, we're looking at a drop of about over 3% in the value of the dollar. Okay, so that will affect any market that is priced in dollars, and also some that are not priced in dollars. Okay, but so everything would become more expensive in dollar terms, and also because it's currency markets go up and down, obviously, because nobody could afford a currency that becomes just more and more expensive to sell their products abroad. So you can see here that we were in a certain kind of wide range for a long time. If you can see, we can go back here from 2014 to up to let's say around April, May of last year. We've been in this kind of range, and then we had a real increase in the value of the dollar, and that is not sustainable for the American economy. Okay, and also causes problem for a lot of the other economies. They have to buy oil, gas, and other commodities in dollars. Okay, so obviously this is not surprising that we have gone back within this kind of accepted really wide range that we've been in for on and off for the past 20 years. But now we starting to see a real shift, and if you are whatever you are, whether you're a trader or you're an investor or you got any money saved in any form, you should take note of these things, because what we might see right now, because the value of the dollar will be likely, nothing is for sure, so but likely the value of the dollar is going down. So when we look at the stock market, for example, that is and the same for risk assets like crypto and other things like this, the effect is positive, because people are earning less for just holding dollars in their bank accounts, in a savings account, or in a bond. So now a lot of people think, well, this is not enough. Now let me try and get more somewhere else. Okay, so that's the main thing that we're going to see. So we might see a kind of like a boom in terms of prices of stocks or crypto or something like this, but still that is not to say that is a kind of like long term, like the beginning of a new bull market, bull cycle that starts right now. Because what we're seeing in the real numbers, so we're talking about unemployment, etc., the cost of borrowing, and kind of like average hourly earnings. All these metrics are starting to, are pointing quite strongly now towards a recession. Okay, so obviously a recession will have then an effect on stock market and everything else, but it's will take a little while to play out in the economy. In the short term, what we're seeing is an increase. Sorry, this is just wanted to show you a little bit of this. So, and just to show you what happens during a news announcement. Okay, let me just go. Okay, so this is what happened when there is a news announcement, how volatile the market can be. Okay, so we are talking here about 2 days worth of trading range in was that 4 hours? Okay, so and that's why I'm saying, be very careful, because these kind of movements, and we might see a similar one, today. These kind of movements, take everything in their path. Okay, so if you're thinking of buying or selling something at a certain price, be careful. Okay, that's what I'm saying. I'm not giving any financial advice, but I'm just saying pay a lot of attention when there are these announcements. Okay, so these are the main things that went on this week. So you can see the pound raised interest rates, the European Central Bank raised interest rates again from 2.5 to 3%. And we have these announcements coming today in a few hours. Okay, so pay attention. What happened in, we can see generally probably the main market in in foreign exchange, the euro dollar, which has been in a, go into a daily chart, and you can see it's been in recovery from the end of September. So it's been on a strong uptrend. So we'll see what can what will happen today. Just take this off. What will happen today? But this is where we are sitting now, in an area of demand which maybe might get broken, and we might look in a little bit at the moment with some temporary US dollar strength. But we're still looking for this trend to continue and for the euro to get stronger against the dollar in the immediate term, until we get to kind of this area here about 113, 114, where there is some strong supply sitting there that could then push the dollar a little bit higher and the euro to go down a little bit. What I wanted to so let's have a look. Sorry, Bitcoin. Okay, now on Bitcoin, where are we sitting here? What's this, a daily chart? So again, we're seeing Bitcoin since the end of the year has had a strong growth from 16.5 to now just between 23 and 24. We've been trading in a narrow range since the 21st of January, so the past couple of weeks. Now this range lately, which was up to, so that was the previous range where we were for a little while. Oh, sorry, not this one. Okay, so that was the previous range, which was then broken this week on the upside. But at the same time, we have to be careful, because this is why there is a lot of chop. Look how quickly it has grown here, because there was nothing, there were no supply on this side. But look at how it slowed down here, because we are sitting just below an area of daily supply, which will take a little while to get through. So unless there is a very strong bullish momentum, we will sit for this in this area for a little while. And what's likely to happen is that when we go beyond this point here, 25,200, there's going to be a lot of stop losses around here, and there's a lot of liquidations happening from bears. They're still expecting Bitcoin to go down. I don't normally work with moving averages, but I just wanted to point this out because you're likely to hear about the golden cross. That basically only means that there is on the daily chart where the 50-day moving averages is crossing the 200-day moving averages. And we have, they've got these names like the death cross when that happened on the downside, which is, as you can see, which is still in now. And then we might be, if we stay in this trading range at least for a little while longer, this might cross on the other direction, which is normally seen by everybody like an indication, like this is the good times, the bull market is starting, etc., etc. I wouldn't be too sure about that. I mean, looking at what happened in the past, sometimes you get this signal are very behind the times, So if we in here, the signal was given at, let's say, at 34,000 to sell, okay, and the signal, so you would have sold, and you would have then bought again here when there was a signal to buy, which was where you would have lost about a third of your money. Okay, so be very careful about giving any credence to these sort of things. These things move because of simply supply and demand, and that's what you should pay attention to, rather than relying on squiggly line to tell you when you should be buying or selling. So anyway, so this is being the reality for Bitcoin. If you look at the hourly chart, we can get a little bit more definition. You can see after we went up, this was 2 weeks ago on Friday. Okay, so we had a strong growth on the Friday, and then sideways. We've been sideways for 2 weeks since then. Obviously, there are, as you can see, there is some impetus on the way up, but this is also, if you have read any of the traditional trading books, so this is kind of like the three impetus wave. Okay, so, and generally speaking, this was the traditional trading books will tell you that the third wave, we have a collapsing price. So this is what that kind of a play is playing out at the moment. So there is an increase push on the way up. It doesn't mean that we are all of a sudden, the next stop is 30,000. There is still a lot of supplies to absorb in the area between 24 and 25,000 before we can move on. And I personally, I don't think that we can call ourselves, let's go back to the daily, sorry. I don't think that we can call ourselves that we are out of the bear market until we break this area here. Okay, until we can be comfortably about 30,000 for a while, and really we want to break this high, and then we could say that this is the start of a new bull market. But at the moment, anything can happen, so there is no certainty in price movements. But at the same time, we know what we can determine quite well is what's going to happen to the economy, and then we can at least make some informed decisions based on based on facts, rather than I think it'll go up or I think it'll go down. So what I wanted to cover with you today, it's the new release of the ARK Invest Big Idea 2023. So let me just go back. So this is, you probably would have heard about Cathie Woods and a company, ARK Invest, which basically is a investment fund that invests generally in technology and in new technology and it's very heavily invested in in all these different areas. So you see some of the areas that they cover with their funds. So they have exchange traded funds that invest in all these things. But what they are, and they published this report, and it was really interesting to read the one from last year. And this one has just been published, so I haven't been able to read it all in detail, but I will cover the most important areas right now. But what also they are talking about is that the convergence of a lot of these technologies together, and the fact that they are converging each other, they're interacting with one another, and they will probably, this is one of their theses, is that they will by interacting, they would then increase the pace of innovation, the pace of growth in general. So so you see there is a these are the kind of risks of investing in products like these, or into innovation stocks or crypto or anything like this. So there is a lot of uncertainty. There is a rapid pace of change. So whatever is relevant right now may not be relevant in 2 years' time. So it's not like you invest in a big company like Shell or General Motors, something like this, and that they're still going to be there in 10 years, and they're going to have a strong advantage. This is not true in innovation. Okay, there is a lot of change happening all the time, and it's difficult to keep up with it. So let me just noted here the important thing that I wanted to cover, because this report, as you can see, is 150 pages long, so I'm not going to read it all, but I'm going to select some things to show you. Okay, so this is kind of one of the most important things. Okay, so the cryptocurrency mining, this is what we're talking about, can actually be beneficial to larger solar battery installation, because the problem with solar installation is that sometimes they have too much energy, and they can't deliver it all to the grid, and some of the energy that they produce basically gets wasted. The same for wind energy. But the advantage of having Bitcoin mining incorporated at some of the sites where the energy gets regulated, because the kind of mining equipment is very easily movable, and it's very easy to switch it on and off, then they can use the excess energy that these electricity generating plants can generate, and that makes it more cost efficient from the point of view of generating this energy, because all the energy they generate has got a return for them, and so it makes it more favorable to have a solar plant, because that you're going to get more for your investment, basically. So at the end of the day, we're talking about money and investment, and you wouldn't invest in new technology if it didn't give you a good return. Now, this is what I was talking to you about less than a minute ago. Okay, so this is the kind of consensus forecast for the next 20 years, pretty much. Okay, so that the world economy, roughly will grow at 2.6% per year. But what their thesis is that this doesn't take account of the technological history and all the projections that are consistent with this technology history. Okay, so we could have a much higher growth if this technology actually gets developed and does grow as it has been growing in the past. Okay, so what we now, this is kind of the world figures. Okay, we are at about 100 trillion with about $12,500 of income per person. Okay, and an average growth at about 3.7%. Now, this is that kind of the thesis with technological, taking assumptions that the technology will carry on growing and will provide new solutions. We could have this kind of growth, and this is the consensus, analyst consensus, that we could grow basically in 2014, a bit less than in 17 years, we could grow to have about $18,000 per capita and $160 trillion economy, so 60% more than where we are today. But considering the increases in technology and improvements, we could actually see much higher growth, and we could actually get to almost like 3 times that amount by 2040 if the technology keeps growing at this rate and is adopted at this rate. This is something as well that, that it's really interesting statistics, because as the technology disrupts existing technologies, it almost shows that, like in this case, this is an example, an electric car like a Tesla Model 3 against a Toyota Camry. Okay, and because the total cost will go down in the future, almost like it looks like there is a decrease in output, but you can see that the vehicle will cost 50% more than a petrol vehicle to buy, but the operating cost was only is 30% less, and the 5-year total ownership cost it's 10% cheaper in an electric vehicle now than in a petrol vehicle. Now, also, what you see, so what we're talking about for the general economy, if you buy an electric vehicle, it looks like after 5 years is looked at as the effect on the economy has been bad because there's less money being spent. Okay, but what is really the effect on the economy would be good, because you're spending less money on assets, so you have more money to spend on other things. So discretionary spending will increase. And so this is, and the other thing to consider is that as these are new technologies, they are still very expensive at the moment. The more units are sold, the more the cost per unit comes down. Okay, so also this cost, as we go and more people buy electric vehicles, this cost will also come down because it's cheaper to produce them. This is the example. Another example: the difference between a standard cable TV package, so everything packaged in one go. This is having the same service, but instead coming from different suppliers, the streaming suppliers like Netflix, Apple TV, Amazon Prime, and other things like ESPN, Disney, and HBO, and so on. Okay, so does it mean that if you consume your TV like this, are you getting less of a service than by having standard cable TV? Yes, you're spending less money. So from an economic point of view, it looks like people are spending less money on entertainment, but the actual value of your entertainment has gone up, because now you're getting more and consuming more, but for a smaller fee. Okay, so this is the research and breakthroughs associated with energy storage and robotics alone. So just these two technologies, like energy storage and robotics, could add 30% to real GDP by 2030. So no, not talking about 30 years in the future. This is in the next 7 years. And also artificial intelligence could be even a lot higher than that in terms of contribution to the economy. Look at this. How much could just contribute as much as all the other technologies almost put together. So these are some of the platforms that could constitute the majority of the global equity market by 2030. Okay, so we have artificial intelligence could be like 36%, energy storage 56%, robotics 68%, genetic sequencing 27%, public blockchains 50%. So this is kind of an increase from where we are now. And look at this. This is where we are in 2022. So these are the traditional technology, and these are all the innovative technology. And this is where we could be in 2030. Okay, so where this technology represents the majority of market value, and the traditional markets like what we have today, yes, will still increase, but would then be dwarfed by the new technology. So so this is disruptive innovation is likely to then become very important in the equity market by 2030. And this is just read this, okay? So if you include crypto assets, the disruptive innovation exposures could constitute 68% of all the risk asset value by 2030. We're talking about risk asset value here. We're talking about, for example, everything that's quoted on the stock exchange, on the stock market, pretty much, and more, like commodities and other things. So this is probably the most talked about technology, which is artificial intelligence, which will dominate, a lot of markets in the near future. So we'll see, for example, these are some examples of what artificial intelligence has created on its own in just 2022. Like I just models that went from grainy images to now high quality 3D models and videos. This is that to show you what difference it can make. Okay, this is the difference between a human coding, okay, doing a programmer coding something on its own, it will take about 160 hours, and doing kind of like working with artificial intelligence, combination of the human and artificial intelligence, the same job can be reduced to about 70 hours. Okay, can you see what difference it can make in the market? And look at this. To generate kind of like generative images like this, we went from 5 hours required and a cost of around $150 to less than 1 minute by generating by AI and a cost of less than 10 cents. Okay, so do you think this can disrupt certain markets? This is what's already possible today. We're not talking about 2, 3, 4, 5 years down the futures. There's already a lot of talk about ChatGPT becoming, being able to overtake, Google's markets. So these are, again, this shows you the cost, how things have progressed over just in 2 or 3 years. And so we went for, this was the cost of training AI in 2020, about 4.6 million. Now it's got less than 10% of that in 2022. This was their forecast. ARK Invest forecast in 2020 was that the cost will go down from 4.6 million to 740. The market has actually overshot that expectation, and the forecast is that this cost to go down to $30 by 2030. That means that anybody, every single person that uses a computer would be using artificial intelligence by 2030, and it would be, the cost would be, would not be an obstacle, will be affordable by everybody. Okay, so this is the thinking. Both the hardware for artificial intelligence and the software cost should continue to decline by 70% at an annual rate. Okay, so this is the the kind of the how it will come down in cost with the more processes they are produced. And you can see going from from where we are now, over $10,000 to to well below $1 by the time we have into the millions of units produced. And this is the same cost by using neural networks. So the effect of this is that now there is an explosive demand now for training data. Okay, because obviously more and more businesses and people want to use artificial intelligence, so there is a lot of request for training data. Now, having access to this technology make the number crunching pretty much now non-existent or very inexpensive. What will still be what's the obstacle is still the data, because like getting access to data that sometimes is siloed, so is protected and is not like publicly available, is the main obstacle to the progress of artificial intelligence. But just being able to have all the data that's in Wikipedia, which is, like, by the way, 4.2 billion words, would be possible. Would be not only possible, but doing something that is like 40 times as big as Wikipedia should be possible by 2030. Okay, so the data will be the main issue. So as you can see here, because the data is still like what's it called, limited availability of data, we might get a point, to the point that who owns most of the data would manage to create a better AI model first and will then dominate the market. So this is what we just talked about before, like the output, the difference between how much can a human do, and the difference by the same human that it's helped and aided by artificial intelligence. So this is what was possible in 2020. 2022, we already more than double the output by using AI, and this is where we might go to 10 times as much by the time we get to 2030. So this is like from one of the main uses that you will find whenever you go online to anything, you'll find chatbots. They are not real people, but they are artificial intelligence chatbots. Okay, so it's a lot cheaper than having a customer service department. And this is the kind of productivity, kind of like knowledge worker productivity, again, by using AI. So as you can see, there are differences, depending on how you wish to consider it. If you think that AI will not be a main issue, so these are the cost of the knowledge worker wages, but kind of middle range, we will see a big investment in spend in artificial intelligence instead of in real people. So this is where they think this is what industry is exploring. Especially, they don't want to have a bigger workforce. They want a workforce that produces more with the same number of people employed or with lower number of people employed. Okay, next thing, the next big wave is digital consumers. Okay, so now let's move on. This is something I want to show you. Sorry, where are we? 26. Okay. I was trying to see the statistics for, let me just give me a second, okay? Statistics for online, oh, there we are, sorry. I just will walk right past it. So this is what the statistics that we had since 2013, and kind of like spent time on time spent online compared to time spent offline, playing sports and doing other things. As you can see, the trend is pretty clear. So we're spending more and more times online, and now we've got we got to about the 40% level. It is expected that by 2030 we would just that would increase to above 50%. Okay, so and this is kind of the trend as well in hours worked per day. So worldwide, the average of time spent working, it's going down. So this is significant because we're going to have more time, and then there are questions on how we're going to employ, how we're going to spend this time. So this is there is an increase in time spent on digital entertainment. So they're still not, this is saying the CTVs, connected TVs, they are still not unlocked in terms of potential from an advertising point of view, etc. But expecting that the connected TV should take share from video from TV advertising budgets from the normal television. These are kind of like some hours spent on different social apps like Facebook, TikTok, Instagram, and then Twitter and Snapchat. And this is the kind of revenues per, as you can see, the traditional one like Facebook, YouTube, Instagram are kind of like stalling, where the TikTok is now coming up. Although it's the youngest of the network, the revenue growth is increasing dramatically. And compared to where the other platforms were at the beginning, they are going at a much higher rate than any of the other more established platforms were when they started. Okay, this is talking about gaming. So, and this virtual gaming is something that would definitely grow exponentially in the next wave of gaming. So these are, compared the physical amusement park, this is pre-COVID, obviously. And look at the numbers like pre-COVID, and look at the numbers for online kind of like meta worlds like the Nikeland or Gucci Town or Walmart Land, you know, and all these different platforms, they now have much higher attendance than the physical ones. So so we can see that kind of like growth that we have in gaming, global gaming software, and this is expected to actually speed up in terms of growth. Okay, where are we now? 40, 41. So the last couple of things that obviously we should talk about, more crypto related. One is digital wallets. Okay, these are apps, you know, like Cash App, for example, that you can use directly for payments at the point of sale. And this shows you how much they have grown. They already have surpassed other forms of payment by 2018. And they keep growing, the digital wallets keep growing as the other forms of payments are all declining. Okay, so all the credit cards, you know, cash, you know, debit cards are still growing slightly. But you can see also as a percentage, as a share, market share, also they are, you know, they've reached over, by 2000, and this is slightly old, this one, but we're already over 30% in terms of market share. So this is kind of, again, the growth of the digital wallet compared to traditional banking institution. This is like JP Morgan deposit accounts, for example. And these are also the numbers, as you can see, up to 2022, the actual numbers, and these are estimates. So we can see the growth of the digital wallet by region. Okay, and you can see the biggest growth is definitely in Asia and Pacific. So definitely then followed by Europe and Latin America. Okay, Europe includes Middle East and Africa as well. Definitely they are growing at a much faster rate than other system. And then this is why, okay? And because the digital wallets allow what is called a closed loop ecosystem for consumer and merchant. So you don't have to go to a outside provider, pay a bank or a credit card company or anybody else to complete a transaction. You can do it directly between you know, the shop and the consumer. So this is the normal process when you use a card, a bank card or a credit card. Okay, so there are like 9 steps in this process. And this is what, whenever you go and use your card to buy anything, this is kind of like, these are all the steps that happen behind the scenes. Okay, and this is a difference instead when you have a closed loop. So you have the buyer, and you have a digital wallet that's used like in network. This from the digital wallet goes to the seller's account. So it's just like 3 steps. First of all, obviously you need to put some money on your digital wallet. So there are ways, you know, however you do it, whether you deposit in crypto, you know, or you go to an ATM machine, or, you know, a transfer from a bank card. But there's only basically 3 steps. And once you got money on it, really, there's only really 2 steps whenever you walk into a shop. Basically, you go in money directly from your wallet to the shop wallet. Okay. So, and this is the difference from a cost, from difference between a closed loop and an open loop. So these are, so this is the cost. So this is what the margin was for the you know, for the transaction processor. Now 1.6% will be then going to payment processing, like credit cards, debit cards, etc., banks, and this is what would be left for the app, for the provider of the service, like Cash App, etc., etc. And this instead is a difference between, you know, having to use the banking system and going directly in a closed loop system. You can see what difference to the net take of the app would be. And so part of this could be passed on as well to consumers in a reduced fees as well, making it even more, you know, more advantageous for people to use this system. So, and this is this is the expectation of growth of these kind of transactions. And basically just realize, in terms of long-term investment, have you got money in finance in banks? This is likely to slowly cut the legs off financial institutions, because you don't need to go to them for stuff. You can do it directly. It takes away the intermediary, and it could be like a huge cost savings for general transactions, for making general transactions that at the moment we have to pay. Like, just think of the difference. If when you use your card, generally the shopkeeper must pay, let's say, about 2% for the transaction, instead of using cash, okay, that means that you repeat this transaction 50 times, and all the value has gone away from the medium of exchange, has gone into the hands of a financial company, okay, banks, credit card supplier, etc., etc. In this way, the transaction is minimal, and most of the value stays in the community. This is why this is so exciting, not just for the apps that are developing this, but also for us as consumers, because it's a much better way to keep the value to benefit the many without big institutions taking away a lot of the value from this. And the last waves, obviously, this is talking about the public blockchains or cryptocurrencies, and we can see, although we had a big drop in market cap in crypto from 3 trillion to just below 1 trillion that we've had a couple of months ago. Still we had this kind of like 3 revolutions that are helped, are fostered by adoption of public blockchain. So we got the money revolution, so the value transfer of property rights. So instead of outside of the central control, financial revolution as well. So financial services that, again, will be more like peer-to-peer, using decentralized finance rather than at the moment going through a third party. And then the biggest one probably will be the internet revolution, going from corporate-owned platforms like Google, for example. At the moment, the 3 biggest providers in internet services are Google, Amazon, and Microsoft. Okay, so they own most of the data. If you have a website, 99% of people would have it on Amazon servers. Okay, if you want to be anywhere as a business, you need to be seen on Google. So it's really they are really controlling the value of a lot on the internet at the moment, and it's kind of like almost like an oligopoly. So there are a few big players that control all the value that's going through the internet. But going forward, that's where we can see a lot of this being more decentralized, and where, again, benefit the many rather than the few. So here, looking at the where we were in 2022, and although we were kind of like in a bear market, if you look at all the metrics, they're still very, very good. So this will show how transaction counts on the Bitcoin network went up a lot, and DeFi as well from 2020 to 2022 again grew exponentially. And then here they're talking about the Web3 data. So and thinking about that, where Web3 will not rely on platforms, okay, but more on protocols. So these are decentralized and will allow open access to distributed data. So that would be limiting the control of a central aggregator, that could be, again, Google, Amazon, Microsoft. And also Web3 embeds economics into the software, so enables the users to both monetize and participate in network development. So there's a kind of like a coming together, again, in Web3 of consumption and investment. They happen in the same place at the same time. So these are some of the market capitalization, where we are now and where we could be by 2030. So at the moment, these are, global real estate is worth about 280 trillion, debt 123, global money supply just roughly about 100, and equity is about 100 trillion, and gold 12. Now, crypto assets in 2022 were only 1. So you can see what has more fractional they are of this. And to get to the estimate of about 25 trillion by 2030 is not a stretch. So just think about the value of some of the more popular coins today. The strongest ones, again, no shot in the dark, new coin. The strongest coins today, and where they could be in 7 years' time, we could look at a 20 to 25 times today's valuations. And this one, I'm almost done with this. Where are we? So this is what I want. The other one I wanted to show you, that although Bitcoin, where's that? So not looking too much at price, but the one thing compared to other market, other asset classes, you can see that even without, I wouldn't go to the 5 year and 4 years, but just look at the 3 years from average growth of Bitcoin compared to, this is compound annual growth rate, by the way. Look at the way the Bitcoin has grown compared to other asset classes. And I know if you go further down the years, it gets even higher. But I wouldn't want you to look at that. Just concentrate on the most recent activity. And the fundamentals of Bitcoin. Sorry, just give me a second. Even in like extended market downturn, the numbers are a lot stronger than when we are in previous market cycles. So you can see here the cost per Bitcoin, cost basis for Bitcoin has gone up to about 20,000. The hash rate, so this is how secure the market, the Bitcoin network is gone up considerably. And here, these are the ones that I would like you to concentrate on. So supply of Bitcoin last moved more than 1 year ago. So we are 66%. This is by the end of 2022. 66% of Bitcoins haven't been moved for over a year. There are 43 million Bitcoin addresses with a non-zero balance. Again, in the last 2 years, they've gone up by, let's say, about 40%. The long-time holder supply is now reached over 71%. And this is the Lightning network capacity that has grown now, and it's growing. So this is where Bitcoin can be used for small payments. It's actually growing quite strongly in capacity as well. So this is the capitulation that we've seen in 2022 is nothing new for Bitcoin. So it's just proportionate to what happened in previous market cycles. And this is what we're just discussing, kind of the holders are more long-term focused at any point in history. In other words, a lot more conviction in people holding Bitcoin for the long term. Here also, they was thinking, one of the things in 2022 was many exchanges actually failed. The ones that are left standing now, they are showing more transparency. So it's showing here when they started to publish some proof of reserves, and you can see most of them in 2021, 2022. A couple of them have done this for a while now. Kraken and OKX have been doing this in 2014. So this is again talking about how Bitcoin in particular can help in the in the kind of technologies where you can't really control what you're taking out of the ground. This will help in some cases like natural gas emissions to use that extra generating power at the point of generating these things. Okay, these are some of the institutions that doing the bulk market started investing in Bitcoin. Okay, so BlackRock, Bank of New York Mellon, Eagle Brook Advisor, they coordinated with ARK Investment Management to make crypto products available to financial advisors to recommend as part of people's portfolio, and also Fidelity. They launched the retail Bitcoin and Ethereum trading accounts, helping investors trade Bitcoin and Ethereum from their platform. So again, these are some of the expectations by 2030, and there are three examples, kind of like a worst case scenario, a middle of the range, and a high, high value, like a best case scenario. Okay, so by 2030, we're going from a minimum expectation of about 250,000, 258 per Bitcoin, middle of the range about 618, and top of the range about 1.4 million. This is per Bitcoin. Okay, so these are the expectations, and these are the criteria that are used to come to these figures. Okay, so they are with this kind of use cases. Okay, in worst case scenario, middle of the range, and best case scenario. Okay, so they're not like just for people Bitcoin would be worth 10 million or something like this, just picked out of a hat, but it has got real real substance behind it. Okay, I think I've almost spoken for an hour, so I will leave all of that, but this is another step. I will encourage you to read this because it's really, really good. It's really interesting. And what I've what I've gone through very, very quickly is about just 1/3 of the report. So obviously we don't have 3 hours to talk about this. Let me just stop sharing for a sec. I'll put this in the chat box so you can, they're free, but you just have to give them your email address basically. And it's free to download. I'll just give you a couple more things of crypto related. Again, talking about crypto and talking about scams, be careful. Now, FTX customers are getting scammed by people contacting them with saying that they can return their assets. Okay, that's not going to happen. Okay, so be careful if you receive a message like this in any form, email, text, or anything else, it's a scam. Australia is actually, the government of Australia is putting new funds behind watchdogs to be able to fight scams, because these scams have skyrocketed by 162% in 2022. So now governments, are actually paying attention to this, and they are, putting some money behind it. On a couple of things, MicroStrategy has confirmed that they will carry on supporting Bitcoin, even if they got a paper loss of 1.3 billion. They sold this time a few Bitcoins, but they claim that it's only to harvest the tax loss. So basically to counteract the earnings from the company, because they're a software company. So basically what they've done, they sold some Bitcoin so the tax loss could cover the earnings, so they don't have to pay any tax, basically. And the biggest news in crypto, I think, excuse me, this week has been the launch of the DGED stablecoin on Cardano. So it's being launched and now it's being backed with 29 million ADA, and the reserve ratio has hit 630%. Okay, so this is really good because it will add a lot of liquidity to the Cardano blockchain. And if we see the numbers, for example, of Cardano in just recent numbers, the last 30 days, obviously gone up by 60%. But even in this recent, like 5% last week and 17% in the last 2 weeks. So if you're on here, by the way, if you're on CoinGecko, just click on good. Okay. Okay. And I think I've gone to 9 o'clock, so I'll close this now, and we'll see if there are any questions. Okay. So anybody would like to unmute and ask some questions? And I'll talk at once, please.
I have kind of a very basic, stupid question to ask, but if you have your digital wallet where you've got your funds on there, can you just walk up, I guess, and just use the same FPOS machines? It doesn't matter. It's just that you're going to not have to have it all routed through the bank, because the FPOS machines are that people are renting those, to go to buy, a can of Coke down the road.
Yeah, no, I don't know. I don't know the answer to that question, to be honest with you. But I know that
Okay.
what they're talking about is getting a lot of retailers onboarded. So you know, obviously you can use your Cash App directly at the retailer to pay for goods. How you put money on the app, you know, generally this at the moment, I think this would be, you know, the usual way, either you transfer from your bank, you know, or another way, or depositing crypto, or other ways of depending on the app that you're using and what kind of options they have available.
Okay, so it is like an app or something. It's yeah, okay. It's another means. You just put like having a travel card that you've got money on it, and you just can use it wherever you want to go, and then you just top it up whenever you need to
Yeah,
as an app kind of
exactly.
thing. Okay, okay.
Exactly. Like and there are some you know, like you might have a, you know, PayPal app on your phone, or another one of those. So any of those that they would are now getting integrated more and more, and being able to be used directly instead of, you know, having to use a credit card. And then, you know, where there are, like, as you've seen the process that I was showing you before, there's kind of about 9 different steps, and each step charges some fees, you know. So that's the big difference.
Luca, would it be like a debit card that's issued from Binance, for example?
Well, it can have well, it's not, in this case, it's not a card. It's just like, you know, imagine that you have a bank account, but instead it's kind of like a decentralized bank account. It's just like an app, like a wallet on your phone. You know, and this can be, I mean, there are already wallets, already crypto wallets that you're aware of, like, you know, MetaMask, the Cardano wallets, and any blockchain wallets. The moment that these kind of wallets are then enabled to interact directly with the point of sale, this is what you will have. So it's not yet. There will be some providers that will also give you a card that you can tap directly on the point of sale, but already now you can use some of these apps to make payments, as long as the retailer is set up for it. Okay. Anybody else?
Hey, Luca, I've got a question. Yesterday, I downloaded my Exodus wallet, like my wallet was on my phone, and I put it onto my desktop. Then I transferred purchased some USDT using MoonPay. The transfer came in, and within 3 minutes had gone straight back out. I've got Exodus on, trying to help me find out what's going on, because we can't find anything on my desktop that would have created that. You got any ideas?
I'm not familiar with MoonPay. So how have you transferred the money to Exodus? Was it like cash, like fiat money, or was it USDC or USDT?
USDT. What I did is I went into MoonPay, used Australian dollars and a MasterCard, purchased the USDT, and it transferred through to Exodus. But within 3 minutes, something had just transferred it straight back out to another address, and we have no idea how it's happened.
My God, and there's nothing. I mean, it sounds like your computer has been compromised to me.
Yeah, we've gone through malware. I've gone through the browser. There's one entry on the Exodus when I was doing the upload of the app or the program. Yeah, it's just my phone's fine, but yeah, just something to be aware of, because I don't think even having a hard wallet would have helped that, because I've done a MoonPay transfer into Exodus with the USDT.
Yes, a hard wallet would have helped, because to have to complete a transaction with a hard wallet, you need to have the device. So unless somebody had your the actual device in their hands, they couldn't complete the transaction.
Okay, all right. So
because you need one of these. So you physically need one of these connected to your computer. So the only way that you could do it without this is that if you have the seed phrase, and if you have the seed phrase, basically you have the access to the account and you can do what you want, you know, and you can put it on another device. But that's an extra step that is more complicated. Obviously, scammers go for the lowest hanging fruit. So, you know, whatever they find available, you know, that's easy to take, they will take.
But it wasn't a lot. It wasn't a lot of money, which was good. I was just testing it out. But yeah, it was just it was really weird to open up the Exodus expecting to see the USD sitting there, and then I saw an outgoing transaction. I'm like going, what's going on here? Yeah.
What concerns me, Carol, and probably could be a good thing actually rather than a bad thing, because you shouldn't be using that computer for anything financial related.
Oh,
Okay.
I've just shut everything down for now. Yeah.
And if you have passwords or something like this, if you have, I don't know if you use a password manager.
No, it's all manual. Nothing is on my computer.
Good. So, but that was my main worry. Kind of like, what else could I have seen? So, what else was on your computer? You know, I would, you know, if you want to do it, you can turn on the computer and turn off the Wi-Fi. So, turn off the internet so you don't have access to the internet, and see what kind of apps you have on there. Because if somebody had access to your computer, they could have looked around. So what else did you access with your computer that somebody could have had access to, and take all the steps you can to change your passwords and do everything that you can to keep it safe. We've had another case in the community with somebody that had money stolen from MetaMask.
Yeah.
You know,
well, I guess you got to wonder too, Luca, as well, is that if they've done something where they have access, have you gone in and dialed into your bank and other things? So are they, you know, keys, you know, what is it? They have a way that they can watch what you're doing, what your passwords and all that other stuff. So I would have someone really that maybe a techie person look at some of this, just because you just don't know, to be fair. I mean, you know, if you know, if they've got in once and they've stolen this, what else do they do? You know, where your other bank and where all your wages and stuff go, do they have access to that? That would just be my concern as well.
Yeah.
You know, yeah.
And also, Carol, do you have anything else on Exodus on your mobile?
Sorry, any other wallets? Or?
Did you have Exodus on your mobile?
Yeah, and I had been using it in the past, it was fine. So the mobile seemed fine.
What I'm worried about, if you had on your computer, you might have had some malware. There actually was a keylogger. Okay, so where people can actually see what you're typing on your computer. And the thing is that if you installed the Exodus on your computer, you probably use the seed phrase. So if somebody used the seed phrase, because otherwise you wouldn't be able to sort of, somebody have seen your seed phrase, you could then connect to your account and take everything from there. So what I would be careful of, probably from your mobile, I would send the assets that you have on there, create another wallet somewhere else, and send them out from that, because you wouldn't want to take that risk that if you go anything on there would be, you know, if somebody had the seed phrase, they can just recreate the wallet and take everything that's on there.
Yeah, there was nothing else in the Exodus wallet. It was just I was doing this transfer because I was trying to avoid using an exchange in Australia. I was just trying to avoid that. And it's so the Exodus told me don't use that account again.
Exactly. Never use it again, because somebody might have the seed phrase to that. Okay. Have the seed phrase to that. Okay. And then they have full control of that.
Cool. Okay, thank you.
Okay, no worries. Sorry they happened to you, but at least it's good they happened when it wasn't.
I'm researching hard wallets now. So.
Okay. Okay. By the way, guys, Jonathan, as usual, will do a 9:30 session on Cardano-based session. So Jonathan, please put the link in the chat box. I would encourage everybody that hasn't been to go, because it's if you want to understand more about Cardano, then he's the man. You can say stake pool operator, and this we got. Jonathan, do you want to say the big announcement of this week? Come on, we're now live on A-Starter.
We are, yes. So we're officially an A-Starter partner pool, which means that we are eligible for merge staking rewards, etc., etc. So the benefit of having some of us get together into a DAO and carry out a pre-launch token sale is that actually anybody who's got ADA in the pool now can benefit from our merge staking rewards. So we'll be getting AA tokens coming back to us as a purchase from the pre-launch, but also then as staking rewards. So
For those of you that don't know what Jonathan was mentioning, it sounded like double Greek. Basically, we got together and invested in a new token, a new DeFi token that's being launched on Cardano called A Starter, and it's through a private sale. So we completed everything, and this week we completed the process. And it's it's great. Now we're waiting for the token generation event, which will be in the not too distant future, in the next month or so. And that would be the start when we start getting rewards for our investments. So, okay, I'll say again, I encourage you to go and see Jonathan's session on Discord. The link is in the chat box, so just click on the link. It's on Discord, and you'll have a really good hour or so of very excellent content from Jonathan. Okay, so I will wish you all a great week, and I'll be here again next week to chat to you some more. And Harry, I'll send you a message by email right now, okay, with a link. Okay, goodbye everybody, and have a great weekend.
Thanks.